Here is a question nobody ever asks. What if patience is not a personality trait you either have or do not have, but a skill, a trainable, buildable, measurable skill? Just like reading a chart, just like managing risk, just like placing an order. What if the traders you see sitting calmly, waiting for the perfect setup, not jumping in on every candle, not revenge trading after every loss? What if they were not born that way? What if they built that? Deliberately, systematically, over time. Because here is what I found after studying this subject deeply. Impatience in trading is not a character flaw. It is a biological default. Your brain was literally designed to be impatient. And the traders who look patient from the outside are not fighting that biology. They have simply built specific structures and habits that make impatience irrelevant. Today I'm going to show you exactly how to build that. Not theoretically, not in vague motivational terms. Practically, step by step, with the exact psychology and neuroscience behind why each approach works. But first, I need to show you the real cost of impatience. Because most traders think impatience costs them a few bad trades. The actual cost is something much, much larger. Let me paint you a picture. Two traders, same account size, same strategy, same market. One is patient, one is not. The patient trader takes 8 trades per month. All 8 meet their exact criteria. Their win rate on those 8 trades is 65%. Their average risk to reward is 1 to 2. At the end of the month, they are consistently up. Not dramatically, but consistently. The impatient trader takes 32 trades per month. 8 of those meet their criteria. 24 do not. They are forced trades, boredom trades, revenge trades, FOMO trades. Their win rate on the 8 good trades is also 65%. But their overall win rate, including the 24 bad trades, somewhere around 28%. Their account ends the month down, every month, and they cannot figure out why their strategy is not working. Here is the brutal truth. They have the same strategy. The patient trader is profitable. The impatient trader is losing. The only difference is execution. And the only reason execution differs is patience. The impatient trader is not losing because of bad analysis. They are losing because they cannot stop themselves from acting when no action is required. Now, I want to explain why this happens, because understanding the root cause is what allows you to actually fix it. The human brain has a deeply built-in bias toward action over inaction. This is called the action bias, and it has been documented across hundreds of studies in behavioral economics. When faced with uncertainty, your brain defaults to doing something, anything, rather than doing nothing. Because throughout human evolutionary history, inaction in the face of uncertainty was often fatal. The animal that froze when it was uncertain usually got eaten. The animal that moved, even imperfectly, usually survived. Your brain still runs this ancient programming. And in trading, it expresses itself as the compulsive need to be in the market. The physical discomfort of sitting on your hands while price moves without you. The restlessness of a calm market day that makes you enter setups you would never take if you were thinking clearly. The irrational sensation that staying out of a trade is equivalent to missing out on money. None of this is rational, but none of it feels irrational in the moment. It feels urgent. It feels like opportunity is slipping away. It feels like action is required right now. And that is the trap, because the market does not reward action. The market rewards correct action at the correct time. Everything else is just noise that depletes your account. There is also a second biological mechanism that drives impatience specifically in trading. And it is one of the most fascinating and destructive forces I have ever studied. Your brain processes the anticipation of a reward in almost exactly the same way it processes the reward itself. When you see a setup forming, when price is approaching a level you have been watching, when an indicator is about to cross, when the story is starting to line up, your brain releases dopamine in anticipation. You feel a rush, excitement, the sense that something is about to happen. And that feeling is genuinely pleasurable. Your brain wants more of it. But here is the problem. The anticipation rush peaks before the setup is confirmed, before all your criteria are met, before the actual signal fires. Your brain has already committed emotionally to the trade, and now it is trying to get your body to execute before your analytical mind is satisfied. This is why traders enter trades 20 pips early. This is why they take setups where 3 out of 4 criteria are met, rather than all 4. This is why they jump in on the body of a candle rather than waiting for the close. The dopamine of anticipation has already fired. The emotional commitment is already made. The rational mind is playing catch up and losing. Understanding this changes everything. Because now you know that impatience is not laziness or lack of discipline in some abstract sense. It is a specific biological, chemically driven response to market stimulation. And it requires a specific, structured antidote, not willpower, not motivation, not telling yourself to be better, structure, rules, systems, pre-committed decisions that remove the real-time choice from your emotionally compromised brain entirely. Now let me give you the actual framework for building patience. 7 specific practices that work at the neurological level, not just as good advice, but as genuine behavioral interventions that change how your brain responds to the market over time. The first practice is defining your A-plus setups in obsessive detail. The most common reason traders are impatient is not lack of discipline, it is lack of clarity. They do not have a precise, specific, written definition of what they are waiting for. They have a general idea. They know what a good trade looks like when they see one, but they cannot articulate exactly, in measurable, checkable terms, what all the conditions are that must be present before they enter. And without that precision, every setup looks a little bit like the setup they are waiting for. Every move looks like it could be the one. And so they enter. Because it feels close enough, consistent, patient traders have a definition so specific that it eliminates ambiguity entirely. Not just the entry criteria, but the time frame, the session, the market condition, the minimum risk to reward ratio, the maximum spread they will accept, the specific candle close confirmation they require. Every variable, written down, checkable like a checklist. When your criteria are this specific, patience becomes structural rather than effortful. You are not exercising willpower to avoid taking a trade. You are following a checklist. Either all the boxes are ticked or they are not. There is no grey area for your impatient brain to exploit. The exercise here is simple but demanding. Sit down this week with no market open, no price moving, no pressure. Write out your ideal setup in the most specific terms you can manage. Then test it against 10 recent trades on a chart. Could you have identified this setup exactly from your written criteria? If not, refine it until you can. This process alone reduces impulsive trading dramatically. Not because it motivates you to be patient, but because it removes the ambiguity that impatience hides inside. The second practice is using alerts instead of watching charts. This is almost too simple, but it is one of the most effective practical tools for building patience that I have ever come across. When you sit in front of a moving chart, your brain is continuously stimulated. Every candle is potential information. Every wick is a possible signal. Every surge in volume is a maybe. Your amygdala is running threat and opportunity detection constantly. Dopamine is spiking and dropping with every move. You are essentially sitting inside the most effective impatience-generating machine ever designed. Because markets are literally engineered to move, and moving things activate human attention systems more powerfully than almost anything else. The solution is to stop watching. Set alerts at the exact price levels where your criteria begin to be met. Close the chart, go do something else. When the alert fires, come back, run through your checklist, and if everything lines up, execute. If it does not, reset the alert and leave again. This practice does something profound over time. It teaches your brain that being away from the market is not the same as missing the market. It breaks the compulsive checking behavior that most traders develop, the every few minute screen check that keeps your nervous system in a low-level state of constant market stimulation. And it means that when you do look at the chart, it is because something specific has happened, not because you are bored, anxious, or seeking stimulation. The third practice is the 20-candle rule for training in session patience. This is a specific exercise for use during live trading sessions. When you feel the urge to enter a trade that does not fully meet your criteria, when the urge comes and you are not sure if the setup is truly there, count 20 candles on your trading time frame before you are allowed to even consider entering. If you trade the 15-minute chart, that is 5 hours. If you trade the 1-minute chart, that is 20 minutes. The exact number of candles matters less than the principle. Create a mandatory waiting period between the impulse and the action. During those 20 candles, just watch. Do not touch anything. Observe how price behaves. Notice whether the narrative that made you want to enter holds up, or whether it dissolves in the next few candles, proving the urge was based on nothing real. What this exercise does over weeks and months is fascinating. It creates a new neural association in your brain between the impulse to enter and the behavior of waiting. Every time you feel the urge and wait instead of acting, you are strengthening the neural pathway that connects market stimulation to patience rather than to action. You are literally rewiring your brain's default response. Not through motivation, through repeated practice at the exact moment the old response was firing. The fourth practice is outcome-detached journaling, and this version is different from what you have heard before. Most traders are told to journal their trades: entry, exit, result, what they learned. This is useful but incomplete. The journaling practice that actually builds patience is tracking the trades you did not take. Specifically, every time you felt the impulse to enter and chose not to because the setup did not fully meet your criteria, you write it down. What the setup looked like, why you almost entered, why you did not. And then, this is the crucial part, you track what happened next. Did price do what you expected without you? Good. You protected your capital and you are building evidence that your criteria work. Did price do nothing and then reverse? Even better. You have proof that the impulse was wrong and your criteria protected you. Did price move exactly as you thought and you missed a win? Write that down too, because seeing that happen 20 times in a row will teach you something important. Missing a trade does not destroy your account. Taking a bad trade does. Over time, this journal becomes a body of evidence, specifically designed to speak to your impatient brain in the only language it understands. Data, proof, track record. Your brain does not respond to abstract advice about patience, but it does respond to 40 consecutive examples of times you would have lost money if you had entered and did not. The fifth practice is sizing down to silence the noise. One of the most overlooked causes of trading impatience is position size. When you are risking money that genuinely stresses you financially, every candle is loaded, every pip against you feels dangerous. Every moment of drawdown triggers your survival response, and a brain in survival response is not a brain capable of patient waiting. The simplest and fastest way to reduce in-trade impatience is to temporarily reduce your position size to a level where the dollar outcome of any individual trade is emotionally irrelevant to you. Not zero, you need skin in the game to learn, but small enough that a loss would not affect your day, your mood, or your finances in any meaningful way. At this size, you can practice patience with real money and real market conditions, but without the biological stress response that makes patience impossible. You are building the habit of patient execution in a low arousal environment, and then, only after that habit is deeply established, gradually increasing size while maintaining the same behavioral patterns. Most traders do the opposite. They trade at sizes that stress them financially, before they have built the psychological foundations to handle that stress. And then they cannot understand why they keep making the same impulsive mistakes. The answer is simple. You cannot build new psychological habits in the middle of a fight or flight response. You have to build them in calm first, then extend them under pressure. The sixth practice is what I call the pre-session patience declaration. This is a simple ritual. Before every single trading session, before you open your platform, you sit down and write 3 specific things by hand. First, the exact setup you are waiting for today, described in precise terms. Second, the maximum number of trades you will take today, and the specific dollar amount you are willing to lose before stopping. Third, a single sentence that captures your intention for the session. Something like, "Today my job is to wait, not to trade," or "I am a sniper, not a machine gunner," or whatever resonates with your specific pattern of impatience. The act of writing by hand activates different cognitive processes than typing. Research in neuroscience consistently shows that physical handwriting creates stronger neural encoding of intentions and commitments than digital input. You're not just thinking about patience. You're encoding it into your brain's planning systems before the session begins, before the market opens and the dopamine starts flowing and your rational commitments start competing with your emotional impulses. This ritual also serves as a transition signal to your brain. It marks the beginning of professional mode, the shift from casual to intentional, from reactive to structured. Most traders flip open their laptop or phone and start trading within seconds of looking at the market. They never make this transition consciously. And without the transition, they bring all their casual, reactive, emotionally available brain into an environment that demands precision and discipline. The seventh and final practice is the most important of all. It is building what I call evidence-based trust in your strategy. The deepest root of impatience in trading is not the action bias. It is not dopamine. It is not even FOMO. It is a lack of genuine belief in your strategy's edge over time. When you do not truly trust your strategy, when you have not seen it work consistently across enough trades and market conditions to believe in its statistical validity, you cannot afford to miss any trade. Because what if this is the one that would have made up for all the previous losses? What if this missed trade is the one that proves the strategy works? You cannot relax. You cannot wait. Because you are not sure the opportunity will come again. But when you have genuinely tested your strategy, back-tested it across hundreds of historical trades, forward-tested it on paper for months, seen it produce results consistently across different market conditions, then missing one trade is genuinely irrelevant, because you know another one is coming. You know the edge expresses itself over series, not individual trades. You know that your A+ setup appears with enough frequency that you do not need to chase the B- setups in between. This trust is not built by reading about backtesting. It is built by actually doing it, taking your strategy and manually going through at least 300 historical trades on the charts, checking every entry against your criteria, logging the results, seeing the win rate, seeing the drawdowns and how they resolve, feeling, viscerally, in your gut, that the strategy has edge, that it survives losing streaks, that it comes back, that the math works. That experience changes something fundamental in how you approach the market. You stop searching. You stop anxiously scanning. You stop feeling like you might miss the only good trade that will ever appear. Because you have seen 300 examples of your setup appearing, and you know it will appear again. Maybe not today, maybe not this week, but it will appear. And when it does, you will be ready. Patience is not something you summon in the heat of a trading session through sheer willpower. Patience is the natural state of a trader who trusts their system, has structured their environment to remove temptation, and has practiced waiting until waiting became their default response to the market. You do not fight impatience. You build structures that make impatience irrelevant. You train patience the way you train any skill, through specific practice, deliberate repetition, and an honest feedback loop that shows you, in real numbers, the cost of acting without edge and the power of waiting for it. 7 practices. Define your setup precisely. Use alerts instead of watching. Apply the 20 candle rule. Journal the trades you did not take. Size down until patience is possible. Write your pre-session intention by hand. Build evidence-based trust through back-testing. None of these are complicated. All of them require commitment, and all of them, practiced consistently over months, will change the trader you are. Not because they will make you feel more patient, because they will remove the conditions in which impatience operates. And the day you realize that sitting on your hands for 2 hours while the market does nothing is not wasted time but earned discipline, that day, everything about your trading changes. If this video gave you something real, something you are going to actually use, hit that like button right now. It costs you nothing and it genuinely helps this channel reach more traders who are stuck in the same impatience trap. Drop in the comments, which of these 7 practices are you going to start with? I read every single comment and I want to hear specifically which one resonated most with you. Sutski, if you are not already subscribed. Every week I put out content like this. Deep, research-backed, practical trading psychology that actually changes behavior. No fake results, no lifestyle marketing, just honest knowledge built for serious traders. See you in the next one.